How is it going, everyone? I hope you guys all had a green day today. Today, obviously, we had CPI release. One second, let me get the zones into frame. So this was the daily plan I released this morning through StockTwits and YouTube. So the first sell zone provided the high of our CPI print, and then our first buy zone rather provided what was it, 30, 40 plus points into the open. Now, since then, we have broken it, but we'll take a look at the intraday order flow, right? We're looking at order flow here. This is a 4-hour chart. This is a footprint chart. If you're new to footprint chart, just go to the home of the channel, and I have a quick video going over how I have my specific footprint charts configured. Before getting into today's intraday order flow, let's take a look at the daily plan and the makings of it. So I start my daily plans every morning with my TPO charts. If you don't know TPO charts, maybe you know market profile charts. Same thing. So what we use TPO charts is for us to know what's going on in the current market auction. Are we trading within balance, out of balance? Is there structure that needs to be cleaned? We're looking at the lows of each of these profiles, the highs, the shapes of them, where value area lows are, value area highs, points of control. Do we have overlapping value areas? A whole bunch of things just like that. One second as I bring up the daily plan on StockTwits. I post the same thing on YouTube. So I think I worded it probably a little bit better over here. To make the most of these opportunities, we'll start by analyzing our TPO charts, right? Every single day brings new opportunities, and that's by examining each of the market profiles. We'll be able to determine whether the current market, or what is the current market auction, identify areas of high and low volume, of course, and determine whether we're in balance or not, right? This analysis will help us make informed trading decisions and create a winning plan for the day. If you go to any prop desk, they're using TPO. They're using order flow, whether it be through footprint, whether it be through the DOM. They're not using candlestick patterns. They're not using moving averages and whatnot, unless it's just a general analysis over a long time frame. But to actually execute ideas, especially day trading ideas, it's all going to be used through order flow, and then the market sentiment and current market auction is going to be through TPO. It's just how it's done. So from there, I go to what we were looking at originally, being the 4-hour chart, right? I love the 4-hour chart. It has some of the best information for us to take as day traders. And again, I think I worded it best here. So I'll mark up the TPO charts, I'll mark up the 4-hour and then the daily, but let's read what I have. Now that we looked at the time price opportunity chart, it's time to dive into the 4-hour footprint chart and analyze the transacted volume, right? We're not looking at bid versus ask or whatever. We're looking at the actual transacted volume. This chart is a goldmine of information for traders, giving us insights into where key levels are and where the big players are executing their orders, right? You're not going to go long just because RSI or MACD is saying something. You're going to go long because you see that there's a huge bid in the market. Someone, something, some type of institution, is buying 10, 20, 30, 40,000 contracts. That's not you or I, right? You want to ride on those coattails, and using the order flow, using the footprint helps you do this. So with this information, we can make more informed trading decisions and stay ahead of the curve. And then, as I said, if you're not familiar about footprint, just go to the home of the channel. So from marking up the TPO, the 4-hour, I then come on the daily and do the exact same thing. Pretty much same thing, right? We're looking where there's substantial bids, offers, kinds of lack of volume, those high volume areas. Do we have exhaustion? We've spoken about exhaustion and all these types of things plenty of times on the channel. Yes. Let's see, where can we find some exhaustion? At the lows, right? 3,500, 3,400 contracts being transacted compared to this huge bid that has been accumulated here, right? No one else is willing to transact up here. Further confirmation of over here, double buying imbalance. All signs pointing up. Not exhaustion, right? So we had sellers. Oh, where did my pen go? We had sellers. I think this was last Thursday, Thursday's overnight session, or maybe in Wednesday's into the close overnight session, then Thursday we balanced, etc. But my point is, we see the selling imbalance right here. Sellers were holding this down, and that's fine. We'll just wait until the signs are there. We run the lows, and where are our signs? Pointed this out in the mentorship room, that the first sign was right here. Yes, we still see exhaustion. It's not time to go long, but we have to open our eyes. You see where sellers were holding? They're not able to hold anymore, and they're being pushed up on the tape. Okay, noted. Not going long. Again, noted. Following here, even more telltale signs. Look at this. At 22,000 contracts being transacted at the highs. What does that tell us? Participants are happy to transact at these prices, meaning we're going to go into price discovery. Sunday session comes, poke above, run out as much of these sellers as we can, come back down to Friday's value area low where we find a bid. Are we going long off this bid? No. Exhaustion's not really there yet, rather play it safe. This 4-hour candle, boom, beautiful exhaustion. Off to the races, right? Now where do we go? Where we know price is happy to trade. We look left, right here. Look how much volume is being transacted over here. We know price is happy to trade here. That's where we're going to go. Just simple rinse and repeat. That's how the market works, to make everything general, right? We have a whole introductory series going into way more detail and how we actually spot these things in real time and how to execute off them, right? People ask me from time to time, why do I release these levels? Aren't you just giving away your edge? No, the edge is in finding the levels. Anyone could be taught how to find a level. The edge is in actually executing off of that, which we teach through webinars and the introductory series and all of that. How to actually execute off of order flow. Reading it, analyzing it, make sure you're reading it correctly is all one thing, but it's all about execution. Is there anything? Oh, let's take a look at the 30-minute. I forgot. Sorry. So with CPI, I'm not one to trade news, so I did not take this, right? But I think it's clear to see we were transacting anywhere from 1,500, 3,000 contracts over here. Sellers here, stop them out, re-engage, stop them out, and then you get this complete exhaustion right at the highs into here, selling imbalance down. These are definitely not easier to take, right? There's no problem missing that trade. And the risk to reward profile when trading news is, of course, going to be higher. Something that I consider greatly in my trading, and that's just why I don't trade news. But into the open, it was perfect. Right before open, we see the starting of a bid. A lot of volume coming in here into open, run out the overnight bid, and continue to build a bid, stop out the bid, exhaustion, and rip, right? Come back up here. These sellers defend, add to their position, selling down, coming back into here, running the initial balance low. Buyers re-engage, exhaustion, just rinse and repeat, guys. That's how this works. Look left. We have these participants were trapped. Boom, sellers, back down, rinse and repeat. This candle closes, trap participants. They provide floor. We go. Rinse and repeat. That's all it is. I think I said a while ago, all market movement is because of poorly positioned participants. You have people who are going to be too early to be along, and that's what we see here. That's where this buying imbalance, this huge bid is people, whatever strategy or indicator, whatever they use, it's telling them to long. Maybe it's just a level of theirs. They long, bid is accumulated, stop them out. We see these two low volume nodes. That is because that is these high volume nodes being stopped out. Terrible arrow. I'm sorry. Stopped out, buying a balance, rip. Oh, what's this? Oh, my data feed disconnected. Whoops. And we're back. All right. Sorry about that. But I think that is everything, right? Now, I'm just showing this generally off of a 30-minute, 4-hour, but I use many different time frames. I use a daily. I'll have a weekly chart up, 1 minute, 5 minute. You need to build confluence between not only your time frames but your tools, and that's why we use multiple tools. I don't just use Footprint. I use TPO, and understanding of how a market works, market auction theory, all that type of stuff. So if you're interested in this type of approach and would like to learn for yourself, I do have a small group on Discord. There's only a few of us, and it's going to stay that way. I don't have any interest in running a large group. I just want to teach some people and have some like-minded traders, right? It's got a capped limit. And if you're just a successful trader, you do see the edge that I have, and maybe you want to compare my rating to the market to yours, you can just have access to the daily plan tab where you'll see those annotated pictures that I sent, or that we looked at before, right? I send them out every morning in the room, obviously not covered. Yeah, so I hope you guys all had a green day today, and I'll see you guys in the next recap.